Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position along with your favorite beverage to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at SmithWeekly, including Jeff S., Sean M., Paul M., and Cindy W. On the program today, we have a returning guest that we're pleased to have back on to update. Mr. Luke Alexander is here for this episode. Luke is the president and CEO of Newcore Gold. The company is focused on advancing its Enchi gold project in Ghana, West Africa, which is currently undergoing deposit expansion and infill drilling activities as part of work for the upcoming pre-feasibility study due out later this year in 2026. The Enchi gold project area remains open for further discovery and expansion potential. Newcore Gold is listed on the Toronto Venture Exchange under the symbol NCAU and also on the US OTC markets under the symbol NCAUF. Mr. Alexander, good to have you back on the program. Welcome.
Yeah, great to be back. Thanks for having me.
Yeah, Luke, good to have you back on. Quite a interesting start to the year, and we're already blasting through January here. Lots of things happen. It seems like now a lot of events are passing in one given day in this market and out there on other fronts as well as geopolitics. Why don't we start off here with maybe just getting your synopsis of the market for a moment and get your thoughts on the gold price and, of course, your outlook for 2026.
Yeah, great start to the year for the precious metal sector as a whole. I mean, obviously, gold has started very strong, and we've seen silver perform very strong. I mean, gold hitting all-time highs, silver hitting all-time highs to kick off 2026. Couldn't be a better time to be in the precious metal sector at the moment. And what I've found encouraging as well is, a lot of the global investment banks and others who make gold price predictions are now starting to update their models. They're starting to come out with their 2026 forecasts. And we're seeing a real ratcheting up of target prices, of buy recommendations, and of increased precious metals prices for 2026, 2027. And then a number of the large investment banks also starting to increase their long-term price forecasts as well. So again, this will then flow through into the market, and it sets 2026 up to be a phenomenal year to be in the precious metal sector. So couldn't have had a better start. We've started to see equity prices performing as well. And for Newcore specifically, we had some great results out last week, and that obviously was well received by the market, which I think, again, is an indication that we have a lot of investors focused on the precious metal sector to start the year. This is the time of year in January where a lot of portfolio managers will start to rejig their portfolios. And I think when you look at the fundamentals of the mining sector and specifically of the precious metal sector, for the producers, we're seeing all-time cash flows, we're seeing all-time margins. All of that starts to flow into the way fundamental investors look at companies. What's the free cash flow? What's the EV to EBITDA? What kind of dividends are these companies paying? Special dividends, buybacks. We're seeing all of that happening in the precious metal sector at the moment. And again, those will all contribute to 2026 being a phenomenal year for the sector. And I think Newcore, we're incredibly well positioned to take advantage of a very strong, robust market.
Luke, thank you for that. Good overview. Lots of stuff we could get into there. I won't get into some of it for sake of time, but definitely we're seeing a lot of things happen here. Investors are shifting focus. There's some great values to be had. Folks are starting to look at jurisdictions like Africa a lot harder. They're realizing that some of those jurisdictions, some of those countries within the continental Africa are quite attractive. Simple projects, low capex, low execution risk, and that of course fits in well where Newcore is today, looking down the sights of a development scenario at Enchi here and progressing all your guys' work to put that together. Metals prices out there, highly indicative of issues out there in the world, economic concerns out there as well. Lots of things are playing into this. And then, of course, just the value recognition for the metals as governments around the world some of them continue to be irresponsible with their fiat paper currency. Well, why don't we jump right into company news? You started to talk a little bit about some of those early results to start off 2026. Good stuff coming out of the drilling campaign, expansion, and infilling drilling work in progress as we speak. You guys did announce results to start off January, a series of consistent good results, grades and intervals coming through in 3Q, 4Q 2025 as well. You and I haven't talked for a number of months here. Talk about that progress as well as the results so far.
Yeah, that's a great summary, and maybe I'll just unpack some of what you said. So starting with, we're in the midst of a 45,000 meter drill program at the moment. As you highlighted, there has been an infill component, resource conversion component to that drilling, as well as a resource expansion portion to that drilling. If we look at that 45,000 meters to date, we've now released about 31,000 meters, including the results we put out second week of January. Looking at the first 30,000 meters of our 45,000 meter drill program, the focus of that drilling was on resource conversion. So moving ounces from the inferred to the indicated category. Key reason for that is we need indicated ounces to be able to produce a PFS, which we're targeting the first half of this year. So that first 30,000 meters, with that drilling, we feel we've now accomplished the infill component to be able to feed our PFS, and we're pleased with the results that we had. Within that drilling, we had some real standout results. Our best grade meter intercept ever on the project, 204 grams over a meter, as well as some other very nice higher grade results that sit outside of the pits. But really, resource conversion was the focus. We did go back to a few previously drill tested areas as well. With the second phase of our drill program, so let's call it the additional 15,000 meters. So let's call that phase 2 portion of the drill program. We're back to focusing on pure exploration drilling. So stepping out along strike at all of our resource areas, all of them remain open. So systematically stepping out and chasing these structures is something we're focused on. Going back to previously drill tested areas, areas where we made discoveries but didn't have the drill density to be able to wrap a resource around those areas. Getting back there, doing additional drilling, growing the mineralized footprint with the goal of over time adding that to our global resource. And then new targets. We've identified 15, 20 additional targets across our project. So continuing to work those up to prioritize which greenfield targets we want to go after is something we're also focused on. A lot of the step out and previously drill tested areas, that's all near surface. So we kind of see that as lower risk systematic drilling. The other thing we're focused on with this phase 2, 15,000 exploration focused portion of our drill program is the deeper opportunity on our project. And it's important to highlight out of the gate that for us, when we talk about deeper today, we're talking about down to about 200 to 300 meters below surface. So for anyone who follows the mining sector, you'll recognize that that is still relatively shallow drilling. But for us, that's what we're referring to when we talk about deeper drilling. And the results that we put out the second week of January were the first set of those deeper results that we've put out as part of this phase 2 program. It's diamond drilling that we're doing with that deeper focused drilling. And it's the first set again of diamond results that we've put out in a number of years. And we couldn't be more happy with the results. Within the results we put out, 174 grams over a meter. We also had a separate intercept of 3.5 grams over 23 meters. Within that, almost 7 grams over 8 meters. We then had an additional 2 grams over 16.5 meters. Within that, almost 4 grams over 4 meters. So those are 3 of the 5 holes that we released. And we only released a total of about 1,700 meters. So a relatively small set of results, but obviously very strong, very encouraging results that further highlight the exploration upside that exists on our project, as well as the geological understanding that we've got, that as we start to identify these high-grade feeder zones, there's an opportunity for us to potentially meaningfully add ounces. So great start to the year from an exploration perspective, and we're very excited to be back to pure exploration drilling and the results that will continue to come through 2026.
Well put together as far as the expansion and infill. On the exploration side, I just want to have you add a few more comments there. Post this campaign, which I think has been a success, any idea or outlook as to how you guys are going to approach the exploration only component of this continuing into 2026 as far as additional work?
Our plan is that as long as we're being rewarded by the market for exploration success, then we will continue to aggressively drill across our project. So right now, we've outlined a 45,000 meter drill program. We're in the exciting phase of that with this exploration drilling that we're doing at the moment. The other thing I'll highlight is that we have an additional $10 million that we're expecting to come in between now and the end of February, so over the next 5 weeks, with the exercising of warrants that are well in the money. So that additional 10 million that will come in, or we're expecting to come in from the exercising of those warrants, will allow us to expand our drill program well beyond 45,000 meters. We'll also then be able to start to look at some FS level work, which we'll look to start on now, so that we're in a position on the back of the PFS to be able to fast track towards completing an FS. So we're fully funded for our PFS, our 45,000 meters of drilling. But then to a certain extent, you can look at it as we're internally funded to meaningfully expand our drill program beyond 45,000 meters to continue to aggressively explore and create more value for shareholders. So that's the way we're approaching it at the moment.
Okay, that sounds good, Luke, and I like that approach. If the market's not going to reward you at this point, might as well kick that down the road till later under cash flow conditions.
And that's one of the ways we've structured our business, and we'll have talked about this when times were tough in 2022, 2023. We were able to pull things back, ratchet things down, be able to stretch our dollars, still create value through studies, modest drilling. But now that we're in an environment where we're being rewarded, we can aggressively ramp things up to create more value through drilling. But if that were to change in the next few months, which I don't think is going to happen, and I think the bulk of the market doesn't think that's going to happen, we could pull things back as well. So that flexibility that we've created within the company is a real advantage we've got as well.
Absolutely. And the conditions are such with this project that you guys can accelerate things on all fronts, still be well within budget. And certainly you guys have been good stewards of the capital there as you advance this project. Market conditions, of course, I suspect this will allow acceleration without any troubles. And of course, with the group, you guys are well networked, well credentialed in the industry, that it'll be no issue to move this forward. With that, why don't we shift gears a little bit into the pre-feasibility study release? I'm sure with some of the results that are coming in, that's shaping up quite nicely, Luke. Maybe you can dial in roughly when you would expect that to come out. I know we see that it's first half of 2026. Maybe you can give us a month range, but of course, with that, your expectations now, given the results you guys have in hand and further results yet to come out. And then with that, why don't you just refresh the audience on how things are looking in terms of current economics, and of course, refresh them on the production profile. Of course, this project is growing. That's a caveat. And also we have favorable market conditions, but just your thoughts on those items.
So beyond the resource conversion drilling that I've talked about, we've been doing a lot of work behind the scenes that will all feed into our PFS, which we'll look to commission in the next few weeks here, and we will look to have completed by the end of the first half of this year. So additional work that's been completed: hydrological work, geotech work, PFS level met work, condemnation drilling, additional environmental and baseline work. So all of that work is, again, the part of the reason why the market will typically pay a higher multiple for PFS stage projects, is because of all the de-risking that has happened. More confidence in the ounces in the ground, more confidence in the flow sheet. All of that means that the market is willing to pay a higher multiple, as well as once you're at a PFS stage, you're closer to production. Investors can start looking at it as a discounted cash flow story, as opposed to, PEA stage where you're still further away from that production, as well as M&A speculation typically goes up once you get to a PFS FS stage. All the reasons why the market will pay a higher multiple are also the reasons why a potential acquirer will pay a higher multiple at a PFS stage. So that's all been happening behind the scenes. In terms of the economics of the project, if you look at our 2024 PEA, we outlined a simple open pit heap leach operation. At a $3,000 gold price, we had an after-tax NPV of 971, after-tax IRR of about 70%, and just over a half-year payback. So very robust economics outlined within that PEA. In terms of additional work we're doing to analyze the project and how to push it forward, one of the things we're looking at is, obviously in this gold price environment, there's a real opportunity for us to optimize the project. If you look at our 2024 PEA, and a lot of listeners will be surprised by this, given where gold is trading today, but we used a $1,850 gold price as our base case. That's what the consultants were willing to sign off on in 2024. Needless to say, at $4,000, $4,600 today, we are in a completely different gold price environment and a different world from that perspective. So with that, we've also spent the last number of months internally analyzing how can we optimize this project? How can we potentially get more out of it in this gold price environment? Needless to say, every additional ounce of recovery that we could squeeze out of this project is meaningful from an economic perspective. So we've been looking at a lot of different kind of trade-off opportunities, looking at heap leach, looking at CIL. What's the delta between recoveries from a heap leach versus a CIL? If we could get an extra, call it 5 or 10% recovery, does that add to the overall economics of the project when we look at the additional capex that would be required? So we've been doing a lot of that trade-off work internally, and we're very pleased with what we're seeing. And that will then ultimately feed our PFS that we look to commission. So those are some of the things that we've been working on behind the scenes, outside of obviously what the market's been seeing in terms of drill results and other work that we've been doing.
Excellent, Luke. I appreciate you going through that, and certainly looking forward to seeing the PFS refreshed numbers. A lot more work is going into this as well, so looking forward to seeing that come out and opening up that package and seeing what we have here. It looks very good already. I suspect it's going to get better, even with some of the escalations out there, some of the issues that would cause price escalation, just on the update alone of just some of the base case assumptions that you could assume here, aside from the fact that the gold price is where it is today.
I'll just jump in there, Andrew, and just touch on is you talk about escalation and prices. One of the advantages we also have is we put our PEA out and did all of the costing in 2024, early 2024. So we're not dusting off a study from 5 years ago. Obviously, coming out of COVID, we saw significant cost escalation, and all you need to do is go look at the all-in sustaining costs for a number of the producers over that period of time, and you'll see that they meaningfully increased. And it wasn't only the mining sector that saw that type of inflation, but obviously all sectors saw it. I mean, we saw it at the grocery store, we saw it everywhere, within industries over that period of time. So once we got to 2024, though, we have seen things stabilize a little bit from a cost perspective. So, we are fortunate that our numbers are still relatively fresh and that we haven't seen the kind of same cost inflation that we saw for a number of years prior to that.
Yeah, that's good to point out. Then also the jurisdiction too, a little more stable and calm, so to speak. I mean, still escalations, but much more of a more predictable, I think, scenario. Yeah, we're not far off there. Of course, we know that there's ongoing various trade related issues out there and different things happening, disruptions in the supply chains and logistics, and then of course, irresponsible currency actions that are happening out there. But besides that, this is looking great, Luke, and I appreciate your guys' work to preempt a lot of this stuff, and also really doing some FS level work now, which you guys want to accelerate along, which brings me into some of those objectives for 2026, maybe talking towards the second half of 2026, Luke. Just any comments on where you guys think you would be going with respect to a feasibility study, maybe the timing on that feasibility study for maybe 2027, and just your thoughts on some of those priorities post-release of the PFS.
Yeah, so as I kind of highlighted towards the end of first half of this year, so call it June, we're looking to get our PFS released to the market. As you just mentioned, we are already starting to look forward to the FS work and starting to lay some of that out and plan some of that so that once the PFS is completed, we can roll right into the feasibility study. And feasibility study, we would expect to take 12 to 18 months on the back of the PFS being completed. That then has us into the middle to the end of 2028. On the back of that, project financing, look to break ground and start building the project. If you look at our PEA, it was a 15-month build. So that has us pouring first gold in 2029. So that's how we're looking at it from a production and from a FS standpoint. On the back of the PFS, we'll also look to get our environmental permits in place as well as mining leases, and we will do that alongside completion of the feasibility work that we've got planned for the project.
Appreciate you giving us a bit of an outlook on the timing and schedule. With that, I wanted to just bring up another key point here. We'll see, of course, new numbers in the PFS, but the capital intensity of the project, Luke, pretty good. And let's just assume for a moment we stay with PEA level assumptions as a starter project, if you will. CapEx very obtainable in this market, obtainable in a bad market, to be honest, especially with a team that you have behind you, obtainable pretty much any time. We talked a little bit about escalation a little bit. We'll see some of that between, PEA to PFS to final feasibility. But as the project continues to expand, does it make sense to you to stick with the current mine plan to obtain that successful ramp up, obtain cash flows, beat that milestone and move on, then look to evaluate expansion scenarios post these objectives coming to fruition? Let's call it that 2029 area. Is that the thinking, Luke? Would that make the most sense? Fastest track to cash flow, then look to add more torque and leverage to this project, which is already being demonstrated.
Yeah, I think in a nutshell, that's the approach. I mean, we've obviously got very strong backing from deep-pocketed long-term institutional investors. I mean, if you go look at our presentation, you'll see we're 55% institutionally owned. These are very large funds who are focused on the mining and precious metal sector. They see our Enchi project as a unique opportunity to get to cash flow quickly, and they are fully supportive of us ramping things up as quickly as possible. So we're laser focused on that, and we see that as a real opportunity to re-rate the company. But we're also not going to lose focus on the fact that we've still just scratched the surface from an exploration perspective. If you look at the average vertical depth of the holes that we've drilled across this project, they only average about 100 meters in depth. When you look at the average vertical depth of the pits that currently constrains our resource today, they're only down to about 80 meters. So we've still just scratched the surface. We've got another 15 or 20 targets we've identified across the project. One interesting note that one of our analysts actually put out looked at the Chirano mine to the north of us, sitting at 5.5 million ounces and growing, and then Newmont's Ahafo mine, which sits at 20 million ounces and growing today. He then went back and looked at when both of those projects put out their initial resources a number of years ago. What has happened since then? Since then, we've seen those resources grow by 5 and 6.5 times. A lot of that growth has come from these high-grade feeder zones that have been identified at depth, which have really added to the overall ounces. To put our drilling to date in perspective at an average of 100 meters, when you look at Chirano, again, our closest neighbor in country along the belt to the north of us, they've now drilled down to 1.1 to 1.2 kilometers below surface, so 10 times deeper than our average drilling. They're currently mining today down at 800 meters below surface. So that kind of district scale exploration upside that sits at our project is, needless to say, something that our major shareholders also want us to be continuing to aggressively pursue, because we see that and they see that as another opportunity to create significant value. I mean, to put it another way, we could wake up tomorrow and find out we've hit a nice big high grade intercept. That will add incremental value. Follow-up drilling, more high-grade intercepts will then create more value beyond that. So continuing to aggressively drill while we fast-track the project to cash flow is the way we think will create the most value for shareholders.
I think that's the right way to approach it. I think given this market, I think that's the way to go here as well. And thank you for the comparables. I would encourage the audience to go pull latest company overview and take a look at that. The comparables in there, very good information here, and certainly the exploration potential of the project should not be overlooked. And so I appreciate you guys continuing to look at that as a major value driver here going forward. Any updates on pre-permitting activities you want to mention as far as progress on that front? And then, of course, metallurgical testing coming from some of the new deposit areas that you want to mention.
So from a permitting perspective, we've been for the last couple of years doing a lot of the work in the background from an environmental perspective. So dry season work, wet season, dry season, wet season, all of that then feeds into the environmental permit, which we will look to apply for on the back of the PFS, as well as a lot of other work from a permitting perspective. We have been in touch with the government and we're working closely alongside them as we work through the PFS, so that when we do get the final numbers completed, that can then roll right into our application process. From a metallurgical perspective, we've also been doing a lot of additional PFS level met work over the last number of months, and that will then feed into our PFS as well, and the options assessment that we've been working on as well over the last number of months.
Very well, Luke. Appreciate that, and good on you guys for doing a lot of that baseline work ahead of the formal permitting start, which sounds like we'll be expecting that to occur sometime getting kicked off formally in the second half of this year. So appreciate that and looking forward to seeing more news on that front. Just any thoughts on, you guys already have, in my opinion, some pretty dang good recoveries coming out of some of the studies that you guys have already been doing and testing. Just any updates on how things are coming together with some of the new deposit areas?
Yeah, so we've put a lot of historical test work out on the heap leach and column tests out for the project, and we've had very good results from those. When you look at what was used by Lycopodium in the 2024 PEA, we had roughly 82% recoveries for the heap leach operation. When you then go look at some of the CIL test work that we've completed and we put out to the market, NIAM, for example, we had low 90% recoveries from a CIL perspective. So from a trade-off perspective, as I kind of mentioned, that's one of the things that we're looking at is obviously if we can get an additional 10% recoveries by potentially using a different flow sheet in today's gold price environment, that's something that could be very attractive and create real value for shareholders. So that's, some of the work that's been happening. We don't have results yet that I can kind of share, but if you look at NIAM, you look at what was used for the heap leach scenario, again, some of the work we've been doing internally is every additional percent of recovery in a $3,000 gold price environment, let alone a $4,500 gold price environment, can create real value. So we're analyzing all that. We've been doing that work over the last number of months, and we're excited for all of that to then culminate in the commissioning of a PFS with the full PSS targeting completion by the end of H1 this year.
Looking forward to seeing those results come out as well. With that capital structure balance sheet, we talked a little bit about this earlier. Some of the warrants are coming in, some have already come in, some are pending.
Just want to be really clear on that point. Sorry, Andrew, to interrupt you, but those expire next month. So those expire February 26th of 2026, 5 weeks from now. So we have started to see those come in already. Our expectation is we will see all of those come in within the next month, assuming we don't see some sort of black swan event in the market, given those warrants have a strike price of 50 cents and are currently 60% or roughly 60% in the money. 80% of them are held by 5 institutional investors who've all reiterated their significant support for the company.
Absolutely. And I think that's going to be useful to point out that this will be part of the funding, of course, very high level of certainty that comes in. With that, just talking budget for 2026, maybe the second half and how that looks. Any funding needs for 2026, Luke, at this point, or do you guys think you guys are good to go for now?
Yeah, we're good to go. So everything we've talked about in terms of the 45,000 meters of drilling, as well as the completion of the PFS, all of that is funded with the cash in the bank. You'll see our last reported cash was $11 million at the end of September. We then have the additional $10 million coming in. That will allow us to expand the drill program well beyond the 45,000 meters and look to continue to aggressively drill right through 2026. The only scenario I could see where we would raise money would be opportunistically, and that would be on the back of Newcore and our shareholders being meaningfully rewarded from the market for exploration success. And I would expect that would be that success is driven by the share price, which would be at a much higher level than it is today. So that's kind of the way we're looking at it. Don't need money. If we were to take money at some point, I think shareholders would be happy because it's opportunistic and we would see the share price above where we are today.
Absolutely. Yeah, well understood here, and definitely in these conditions, plus company-specific drivers, we could see some good appreciation this year as well, Luke. So I appreciate you covering that off in the approach. With that, why don't we just remind the audience, just refresh them, maybe for some new audience who just showed up and is hearing this for the first time and hearing of Newcore, just the key investors on the roster. You mentioned some of the large institutional holding, but also some of the insider ownership Just talk a little bit about that and, of course, current shares outstanding.
So today we've got about, call it 260 million shares outstanding, 20 million warrants well in the money. So that should bump us up to 280, 285 million shares outstanding. Management and board, we own 15% of Newcore. That's money that we've invested alongside shareholders over the last number of years. So it's important to highlight that this isn't stock we gave ourselves at half a cent a share and then came to you, Andrew, and others and say, hey, why don't you fund us at multiples of that? We wrote checks alongside shareholders over the last number of years. And then your second question was around institutional investors. So we are currently sitting at about 55% institutional ownership. That will grow to about 60% on the back of the exercising of the warrants. Our largest publicly disclosed shareholder today is Franklin Templeton. We then have Aegis out of the US, who's a deep value focused investor, Ruffer out of the UK, Commodity Discovery, SSI, Merck. We've got a long list of institutional investors, and then a number of those investors you won't see in our presentation just because they don't publicly disclose. And then I'd also just highlight, and anyone who is potentially a client of or has access to either Canaccord, Haywood, or SCP's research, then we're covered by all three of those investment banks or brokers. And I would encourage you to have a look at their research as well.
Encourage folks to pull that research off, take a look at that as well, and consider that as part of their analysis. Well-known brand names, household names that you mentioned there, Luke. With respect to community relations, wanted to just touch on that before we wrap up. Any comments or updates on that front?
Yeah, so we've been working in the Enchi community for the last number of years, over 10 years now. So we've built deep relationships with the local community. The individuals who head up our ESG side of things are from the town of Enchi. So again, very deep relationships with the individuals in and around Enchi. So, we've worked hard on those relationships, and probably the big thing we always get asked is, when are you going to put this project into production? There's obviously a recognition that with producing mines comes jobs and additional benefits for the communities. And you see that across Africa, and you see that around the world. Communities that have mines next to them are typically, better serviced than communities that don't. So from that perspective, we've got a tremendous amount of support. When you then look at a national level, there's a lot of support for the mining sector as well. They're keen to see mines built in country. It's important for the tax base. It's important for the economy. It's important for jobs. All of those things mean that the Ghanaian government is keen to see our Enchi project move from exploration development into production. One of the interesting dynamics you have in Ghana is currently the sixth largest gold producer globally. It's the largest gold producer in Africa. You've got 4 of the top 10 largest gold producers there, including Newmont, Anglo, Goldfields, Zijin. We've then got a number of mid-cap companies such as Perseus, Chifeng, Shandong, and others. But below that production, there's a dearth of development stage projects. So when you look at the country as a whole and you look at development stage projects, we are one of the top 2 most advanced gold stage projects in the country. So with that, again, the government wants to see projects built. So there is a recognition that working closely with Newcore, working on our Enchi project in tandem is the best way to take it from development into production. So we've got a lot of support from the government from that perspective, and we'll continue to work with them to obviously try to fast track this into production as quickly as possible.
Luke, that sounds good, and appreciate your guys' efforts there to help educate community and involve community, local service providers, subcontractors, et cetera, to push this project ahead, and then also secure very long-term career job skill building opportunities for the local community. Fantastic thing to have those actually happening and you guys actually get into production and see that reward to the community. I think that's one of the most fulfilling things you can have.
So that's actually a great point, and a number of things that you just touched on that. Maybe I'll just elaborate on those, Andrew. That is another one of the real advantages we've got in Ghana, is that there's a lot of service companies operating there. A number of service companies, call it drill companies, assay labs, and others, service all of West Africa out of Ghana. So their head offices are based in Ghana, and they service the rest of West Africa, which you would expect given it is Africa's largest gold producer. So there's a huge amount of business for them to be done in country. But for us, that's a real advantage because it means we've got multiple drill rig companies we can work with. We've got Geodrill, which is one of our main drilling contractors, sitting 4 hours up the road from us. We've got multiple assay labs that we can work with in country. And then from a employment perspective and an employee perspective, Ghana has 2 mining universities in country. Mining jobs are some of the most sought after jobs in the country. We probably get a couple of hundred resumes come through our inboxes on a monthly basis with very qualified individuals trained by the Newmonts and Goldfields and Anglos of the world who are keen to come and work with us. I think that's a real contrast to what you see in a lot of other parts of the world, including, Canada, the US, and others, where nobody wants to work in, or limited numbers of people want to work in the mining sector, and mining's become, a dirty word. Whereas in Ghana, it is a very sought after career for good reason.
Appreciate the thoughts on that. And Ghana is a fantastic jurisdiction for gold production. So get to understand why you guys have so many good services there. And then, of course, in the region, of course, with the existing mines and being able to add a few communities through development of new mines really adds to the bottom line for the country there. So really appreciate the work you guys are doing on that front and including folks as you guys advance this forward and enriching the community. I think it's one of the best things that any community can do. In the West, a lot of folks talk about, oh, no mines in my backyard, but they fail to realize that what it took to build their backyard and what we have for a platform to launch from today required all those activities. So it's a very good thing to highlight that and remind folks of that. Well, Luke, really appreciate the time today. Why don't we wrap it up for this update? For potential investors who are listening in, the company has a market capitalization of about 220 million Canadian dollars. Why should Newcore Gold be considered within the institutional, family office, and retail investors portfolio at this stage?
So we're advancing the Enchi project in Ghana. I think we've highlighted a number of the reasons why I believe it's a tier 1 jurisdiction to be operating in. So very fortunate to have amassed the land package we did and be able to significantly de-risk it to the point of being able to produce a PFS, which I think will be a meaningful re-rate for the company. But beyond the fundamental underpinning of value and re-rate that will come, or I expect will come, with the publishing of our PFS at the end of the first half of this year, we have true district scale exploration, which I think is highlighted in some of our most recent drill results, which we put out the second week of January. And we're excited to continue to aggressively drill on our project and get results out to the market, which we think could create outsized returns beyond the fundamental re-rate that I'm expecting to come with the PFS. So fundamental underpinning of value with district scale exploration torque to the upside, and a management team and board who are truly aligned with shareholders through our 15% ownership in the business. So we're keen as a team to create significant shareholder value, as well as we've got very deep pocketed, long-term focused institutional investors who recognize the tremendous upside that there is in the project, who are keen to support us to aggressively drill and fast track the project into production. And then nice support from a investment banking capital market side, with obviously 3 investment banks covering us today.
And for further information, how can folks contact the company?
Go to our website. I'd encourage you to sign up for our mailing list, news flow out from that perspective. From a content perspective, I'd encourage you to go to X or LinkedIn, or join our YouTube channel or Facebook. We put lots of good content out on all those different social media platforms. Good feedback from investors and others. So that's another good way to follow us.
Luke, appreciate that. Well, keep up the progress, and we're looking forward to talking again here in a couple of months, and really appreciate you coming on to update on Newcore.
Thank you very much, Andrew, and thanks everyone for listening.